JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 12th of January 2022. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, just a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So you have to check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225, and basically we are still oscillating inside that pattern, the one that I kept talking about, and we're basically oscillating around those EMAs in our daily chart. So again, just wanted to give you a quick update here. I'm not really doing anything with it with this one right now, just observing the price action, because at the moment it's quite tricky. There we go, quite tricky here, because I mean it could just continue moving sideways until we get that clear breakout through one of these lines, one of these trend lines, which form both sides of the triangle pattern. So keep that in mind for now. Jumping into Shanghai Composite very quickly. So this one yesterday moved higher, but as you can see, it kind of climbed up again. I mean, the help from the U.S. equities did kind of, the U.S. indices did kind of spill into Shanghai Composite here as well. So yeah, and Nikkei, of course. So everything's kind of looking quite okay still. I mean, I'm still sticking to my idea of maybe seeing this one as a possible falling wedge pattern. So if that's the case, then yes, we could see a pop higher later on. But as I said before, we need that confirmation breakthrough the upper side of the wedge pattern first, and then yes, higher levels could be met, guys. For the downside, again, this is due to the situation and the technical picture here. I would prefer actually to see a break of this upside line here and a drop below the 200-day EMA in order to get a little bit more comfortable with lower levels. The German index, DAX. So the German index did push a little bit to the upside yesterday, made its way higher, but the cash index did perform better, and we did climb above that 15,943 territory. As you can see, we closed below it. We closed just very near that area, the one that I talked about yesterday, and then yes, after hours the cash index did push further north here, and we managed to also climb above this barrier, above the 16,044 territory. So that of course paints a bit more positive picture. So now we're kind of examining the upside, and my next target here could be this one near the 16,202 zone, and then yeah, we'll take it from there. Like I said, that's going to be my next target. If we clear that, of course, the next target is the all-time high near the 16,290 zone. So, and then we will take it from there. As you can see here, this is the all history that I have here on my chart, let's see if we can reach that highest point of November when the index formed that all-time high. So long story short, for now, yes, I'm leaning towards the upside, and for the downside, I would need to see maybe a drop somewhere below this hurdle. Now, let me just adjust a few levels here. Now, somewhere below this 15,862 territory right here, because depending on how we're going to play out here, maybe the 21-day EMA could approach this area by that time, and then yes, all could line up nicely here, and we could see a break of this hurdle and a break below the 21-day EMA, which could strengthen the downside scenario. But at the moment, the downside scenario is slightly off the table unless something drastic happens. Dow Jones Industrial Average, guys, so good push higher yesterday. The top performing US sectors were energy, basic material, consumer cyclical, and technology. So technology was kind of initially one of the top ones, but quickly kind of faded away. The worst performer was the utilities sector, and yeah, that's that didn't do well, but again, energy just exploded nicely to the upside, guys. I mean, that was all energy stocks did show a fantastic performance. A lot of energy stocks are sitting in Dow Jones, so we can see, yep, Dow Jones pushing nicely to the upside, and from the technical side, although we had some violations of this 21-day EMA, eventually it did provide decent support, and now we're seeing a nice good push higher on the cash index. The cash index is currently sitting at around 36,306, 305 zone. So yep, above yesterday's close. So if we're looking for some upside now, I would say be very careful, because as you can see here, this is where we closed yesterday. We closed near this 36,246 level, which is marked by the inside swing low of the 3rd of January. We closed slightly above it, and yep, that kind of that could have been that little signal that some further upside could be possible. So so for now, I would say as long as it stays above this 36,246 level, then yes, I'll continue targeting the upside, or even maybe the all-time high near the 36,952 level. So keep that in mind. Jumping into NASDAQ, guys. NASDAQ did perform quite well here, as you can see. Of course, as I said, technology stocks did lead the way as well. And yep, we can see a nice good push higher here. A nice reversal from this 15,543 territory. I spoke about one of these levels previously. And another thing here, what I said to you yesterday, that if we pop above that 15,628 territory right here, marked by the high of the 10th of January, then that could open the door towards some higher levels. And well, I mean, especially if we pop back above the 100-day EMA, and well, look at what happened. We pushed higher, we made our way further north. Now I'm targeting that 21-day EMA initially, and then we'll take it from there, because maybe this will get cleared, and we could see a further move north, where we could target maybe that 16,250 zone, and then we'll take it from there. For the downside, I need to see a nice good close below this 15,356, 57 territory right here, and then yes, we could go for some lower levels. Now, DXY dollar index. So we've approached the lower side of the range again, and now the big question here is, can we see a nice drop here, guys? So of course this is all looking quite bearish here, but don't get me wrong, we cannot rush into anything yet, because we need that confirmation break. And let me just adjust a few levels here, guys. Yep, there we go. So this is gonna be what I'm gonna be looking at, and I'm gonna be keeping an eye on this 95.52 territory right here, roughly around here. If we get a drop below this, then yes, I'll aim for some further declines, and I'll aim for that larger correction to the downside, because we are still trading above this upside line taken from the low of the 25th of May, so don't forget about that. Now jumping into gold very quickly. So gold popped nicely to the upside, and as you can see, it got held near this downside line. I talked about it yesterday, and well, look at this. I mean, it worked out perfectly. We got held near near this downside line taken from the high of the 16th of November. But what I said that, I mean, at the moment we're kind of getting into a bit of a squeeze. There's a squeeze within a larger squeeze, I would say. So let's see if we can break this downside line. If we can, then yes, we could go for the upside. We could aim for that downside line here taken from the high of the 1st of June, and then yeah, we'll take it from there. So for now, long story short, if this downside line is not really comfortable, you're not really comfortable with this downside line, then what you can do here is keep your eyes on the current highest point of January near the 1831 level. A nice good pop above it would confirm a forthcoming higher high, and potentially more buyers could join in. So for the downside, well, the only thing for what can the bears do now is hope if this, so that this downside line could continue providing resistance. If it can, then yes, we could see a drift lower. But to be honest, I would prefer maybe to see a drop below this upside line right here, taken from the low the 30th of September, in order to get a little bit more comfortable with lower levels. Now jumping into US oil, WTI oil, and boom, there we go. Up to nicely to the upside. We cleared the 79.33 level. I talked about that level yesterday, if you remember, and actually not only yesterday, on Monday as well. I talked about it, and we managed to clear that area. We popped above it nicely, and then not only that, we also cleared the previous highest point of January near the 80.45 zone. So long story short, for now, this confirmed the nice forthcoming higher high, and potentially the further acceleration to the upside could be possible. However, as I mentioned before, to keep your eyes on this downside line taken from the high of the 22nd of October. If that gets, if the commodity gets a hold up somewhere around here, well, another slide could be possible. So but at the moment, guys, I'm kind of let's say leaning a little bit more towards the upside. At the moment, like I said, we need to be very careful here. Yes, I'm leaning to the upside, but I'll be very careful near this downside line. So because if it breaks, then yes, good news for more buyers. We could see this one popping further north, maybe even going all the way towards that 100 level. So who knows? But again, everything can happen. So we were at the extremes previously, so let's see if we can go to the other extreme now. So yeah, it's a bit, that's the period that we are living in right now. So Litecoin, very quickly on that one. So I've talked about Litecoin previously, and yeah, so far so good for the bulls, because we are getting a nice hold up near this lowest point of December, near the 126.80. Yes, we had a few overshoots here, but still overall the crypto is trading, it's trading above this barrier, above this hurdle, this 126.80. Yes, after reaching that 120.73 level, it pushed higher, and now, of course, yes, everything's kind of looking quite promising, quite positive, but I would prefer maybe to see a push actually not only above this 139.75 level, but somewhere above this area here, basically this area in between the 139.75 and the 141.24 levels, and at the same time I would like to see a nice good push above that 21-day EMA in order to get a little bit more comfortable with higher levels. AUDNZD, so AUDNZD, this one, I haven't looked at this one for quite a while, to be honest, and yeah, you can see that a few things changed. Let me just adjust some of the lines here. Probably this one we can recycle, and let's see if this is gonna work out. I mean, I want to see if this is gonna end up being a nice rising channel formation. Well, could be the case. It's not ideal, I would say. It's not really kind of picture perfect here. That's why I don't know if to keep it or not. But okay, for now, let's see if this is gonna play out or not. So just for the sake of it, for now, I mean, I'm gonna keep it on chart, yeah, and then and then we will take it from there. Kind of for now, everything's kind of according to the rules. Yes, if it is a rising channel, then yes, we are drifting nicely to the upside within it. But if you're looking for some more reassurance for the upside, maybe you could keep an eye on the highest point of January, the current highest point of January, near the 1.0650. A nice good pop above it, yep, would confirm a forthcoming higher high, and next target could be near the 1.0740 level, and then yeah, we'll take it from there, guys. Now, USDCAD. Oh, and by the way, in terms of the downside on this pair, well, this is where I'll put this level here, the current lowest point of January, a nice good drop below it. Depending on where we're gonna be, either if we're still inside the rising channel here, then yep, I'll aim for the lower side of the pattern. But if we would already somehow be here somewhere, then maybe this could come as a nice breaking point here, and maybe also the 200-day EMA could approach this area, and we could see a nice drop lower here below all this. But again, let's not go too far into the future. For now, we're traveling a little bit higher here. We're approaching this 1.0650 zone. Let's see if we can break that. USD CAD, guys, very quickly on that one. Boom, finally. So if you remember from Monday, or actually no, it was more than from Monday. I mean, I was talking about this one already from last week and the week before. Yeah, last week, sorry. So what I talked about here was that just maybe we could see this one as a possible head and shoulders pattern. Well, I mean, so far we seem to be getting exactly that. So when we were still trading around here, I said maybe we could get a nice rebound, a push higher, and then maybe a formation of a right shoulder, which yeah, we managed to do. And this 21-day EMA also played out nicely. I've mentioned that as well. And it drifted nicely to the downside. So what I then said, that if you're looking for some lower levels, wait for a breakout below this highlighted territory, and well, we got that. So we got that breakout. Now let's see if it stays below this highlighted territory, then my next target here will be somewhere around here, near the low of the 16th of November, around the 1.2493 zone, and then yeah, we'll take it from there, guys, because we'll just go slowly on this one, step by step, and if it does reach that, perfect, okay, maybe even actually I would say mission accomplished, because this is going to be my initial target. Maybe from here we could see a bit of a rebound here, because now what I'm going to keep an eye on is this downside resistance line taken from the high of the 20th of December, and all that. Yep, on all that could play out nicely. So long story short, guys, for now, like I said, I'm leaning a little bit more towards the downside, as long as it trades below this highlighted territory right here, which is basically below that 1.26 zone. GBPUSD. So there we go. Finally breakout, and this is what I talked about. If you remember, I talked about this from the beginning, from Monday, from the beginning of this week, and yep, we nicely broke out here, and we stayed above this area, but we stayed above that downside line. So this kind of points a little bit more towards the upside. And also one thing to keep in mind, of course, keep your eyes on DXY. If DXY starts dropping lower, then well, we could see GBPUSD pushing further north. So everything's looking quite positive for now here on this pair. But again, also one thing that I need to mention in the past, and I've mentioned this already in the past, so we could see maybe this one traveling a little bit higher. So maybe just bear with me, let me mark this on the chart. So maybe we could travel towards this area somewhere around here, near that 1.37 zone, maybe test it, test the area around it, and if it provides a good hold up, a drop lower, a move back down here could be possible. So something maybe like this could be an idea. So if this 1.37 territory does provide good support, resistance, we might see this pair correcting a little bit lower, because we already had quite a decent up move here. So maybe a bit of a corrective move to the downside here could be possible. So but yeah, at the moment, be very careful with this. Also, if in case this decides not to travel straight away to the upside here, it could, for example, slide slide a little bit, and it could continue sliding alongside this downside line on top of it. So as I've mentioned this before, we've seen such scenarios before. So keep that in mind. And if this downside line does continue to provide support now, then we could see a nice push higher again later on. Quick update on EURCHF. So I haven't looked at this one for quite a while, but yeah, it's quite interesting. And previously when I talked about it, I said that keep your eyes on this 1.0390 level, which if it gets cleared, we could see a nice good push higher, and the push above this 21-day EMA, all this could lead to a possible test of this 1.0492 level, which is marked by the lowest point of May of 2020, and I think that's the lowest point of 2020. Let me just quickly double check. Yep, that's correct. So we managed to reach that area, we managed to climb above that area, and most importantly, we managed to stay above that area. So, can we go further north? Well, I would say there is a good chance for that, because, again, as long as it continues to trade above that lowest point of 2020, then my next target is the 100-day EMA here, shown as the green line. If it falls back below it, I'll take a bit of a neutral stand, because if we're still above this 21-day EMA, maybe this could be seen as a temporary correction before another possible leg of buying. Because if one thing I want to mention as well, and this is probably something that you should kind of keep in mind as well, sometimes when we do have scenarios like this, I mean, eventually it will come back down a little bit, maybe for a bit of a corrective move lower. Will it be now? Well, let's wait and see, because I'm keeping an eye on that lowest point of 2020. If we drop and stay below it, then maybe I'll consider a bit of a retracement here. This upside line that I'm trying to draw here, it's at the moment it's nowhere. I mean, we need that point, we need that second point at least in order to have this nice upside line. So that's why I'm saying that at some point we will have that little correction. Of course, that's logical, but can we get that correction after we reach the 100-day EMA, or will that come, let's say, a little bit earlier, and then after the rebound we could go for that 100-day EMA? So let's see how this is going to play out, guys. For now, I'm going to say that keep your eyes on this 1.0492 level. If we stay above it, then yes, I'll go for some higher levels. And finally, EURUSD, guys. So EURUSD, same game plan is valid. What I kept on talking from the beginning of this week, basically, and from last week as well. So we are stuck here in between these two lines, these two trend lines, one short-term tentative one, and the other one medium-term downside line here. So yeah, at the moment we cannot really do much. I mean, we've approached the quite important level that I was looking at previously, the 1.1383, and can we pop above it? Well, we'll have to wait and see, because still for me the more weight carries this downside line, because again, also in a similar way as with GBPUSD, I mean, GBPUSD is pushing nicely to the upside, but if DXY somehow continues to hold somehow near this hurdle, and let's say, for example, it rebounds back to the upside, then maybe EURUSD could stay in this little squeeze for quite a while. But if DXY eventually drops nicely here through this lower side of the range, well, I mean, that's where EURUSD could pick up on and move nicely to the upside, guys. So basically, yeah, that's it, guys. Thank you very much for watching and listening. I really appreciate your time. I hope you found this video useful. Thank you very much for your views, guys. Thank you for that. And if you want to catch me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. Yep, the usual. Yeah, we'll take it from there. We'll see what the market has prepared for us for Thursday, but at the moment, let's see what the market has prepared for us for Wednesday, guys. So have a wonderful trading day, and I'll see you later. Bye-bye.